All right, welcome aspirants. We're about to dive deep into India's latest foreign trade data for the first half of the 2025-26 fiscal year. This is absolutely crucial stuff for your exam prep, so let's get right to it. Okay, so here's our game plan. We'll kick things off with the big picture, then really get into the weeds on merchandise versus services trade. After that, we'll spotlight the key export sectors, touch on the global headwinds, and wrap it all up with the most important takeaways you'll need for your exams. Okay, let's start with the headline number. This is the one you absolutely have to remember. For April to September 2025, India's total exports, and that's merchandise and services combined, hit an impressive 413.30 billion US dollars. But here's the context, and this is just as important. That figure represents a positive growth of 4.45% compared to the same time last year. You know, in today's global economy, any growth is good growth, so this is a really crucial data point. It signals some serious resilience. Okay, Section 1, the big picture. Let's see how this all fits together into the overall health of India's foreign trade. So take a look at this table. You can see both exports and imports went up, right? But the really interesting part, the number to watch, is the trade balance at the bottom. It actually improved a little bit. The gap narrowed from about $60.87 billion down to $59.48 billion. So a slight improvement, but hey, an improvement is an improvement. All right, Section 2, merchandise trade. Now, that big picture number is really a tale of two completely different stories. First, let's dissect the merchandise trade. We're talking about physical goods here. So what is the merchandise trade deficit? This is a key concept for your exams, so listen up. It's pretty simple. It's what happens when we buy more physical goods from the world than we sell to the world. And it's a major indicator of economic pressure. And this is the crucial part, so pay close attention. The merchandise trade deficit has widened. Look at that number. It's gone up to almost $155 billion. That's a pretty significant jump from last year. This is the area of concern. But for a deeper analysis, and examiners love this kind of detail, we need to look at the core exports. If you strip out petroleum, you'll see that non-petroleum exports are up by a healthy 7.04%. This really shows the underlying strength in our diversified manufacturing base. It's a very positive sign. Okay, let's move on to Section 3, services trade. And this is the bright spot. If merchandise trade is one side of the story, services trade is the other, and it brilliantly illustrates India's consistent economic strength. So, in complete contrast to the goods deficit, India consistently runs a services trade surplus. This means we sell way more services like IT, consulting, you name it, than we buy from the rest of the world. And this surplus acts as a massive cushion for that merchandise deficit we just talked about. And how big is that surplus? Well, it is substantial. For April to September 2025, the services trade surplus clocked in at $95.5 billion. That's up from $84.3 billion just last year. This is a huge deal. So, Section 4. Which specific sectors are driving this merchandise export growth? This is a very, very common exam question. So let's look at the engines of growth. Here they are. These are the top 6 merchandise sectors showing the most significant growth. You've got electronic goods, petroleum products, engineering goods, rice, marine products, and drugs and pharmaceuticals. Memorizing this list is pretty much essential. So, how do you remember all that for an exam? Well, let's use a simple contextual mnemonic to lock this in. E-permed. Just think of our exports being E-permed up for growth. Let's break it down. The first E is for electronic goods. With that staggering 50.54% growth, that's the real standout. Then P for petroleum products. The second E for engineering goods. R for rice. M for marine products. And finally, D for drugs and pharmaceuticals. E-perm D. Got it? Okay, Section 5, global headwinds. Now, this growth, it didn't just happen in a vacuum, right? The global trade environment has been incredibly challenging. We're talking about some serious external pressures here. And this quote from the Commerce Secretary, Rajesh Agrawal, just captures the situation perfectly. He said, "It has been a turbulent year for trade that has resulted in a recalibration of supply chains." That key phrase, recalibration of supply chains, is exactly what you need to understand. And this slide illustrates that recalibration brilliantly. On one hand, you see exports to our top destination, the US, dipped by 12%. But on the other hand, exports to the UAE and China surged. We're talking 24% to the UAE and 34% to China. This shows a very clear shift in our trade focus. The impact of those US tariffs is concrete, and it's hitting our labor-intensive sectors the hardest. We're talking about textiles, jute, and carpet. These sectors saw dips of 5 to 13%. And look at this. 85% of textile firms reported inventory buildup because U.S. orders got canceled. This is a major point of concern. Okay, last section. Let's consolidate everything into the most important takeaways for your exams. What do you absolutely need to know? So, the big numbers. First, total exports for the period, $413.30 billion, with a solid 4.45% growth. Second, the merchandise trade deficit widened to almost $155 billion. That's the concern. But third, the services trade surplus grew to $95.5 billion, providing that crucial cushion. And finally, the IMF's 2025 GDP forecast for India has been upgraded to 6.6%, signaling strong momentum overall. Next, the key trends and concepts. First, don't forget the mnemonic for top exporters, eat permed. Think electronic goods. Second, the big theme is trade recalibration, that clear shift away from the US and towards places like the UAE and China. And third, the sectoral impact, the incredible performance of electronic goods, with over 50% growth, contrasted with the negative impact on textiles. And this leaves us with a critical question for policy and for analysis. As India navigates all this global trade turbulence by shifting its focus, what long-term strategies are really going to be needed to protect those vulnerable, labor-intensive export sectors? That's the big challenge ahead.